Welcome to Barenaked Money, the podcast where we strip down the complex world of finance to its bare essentials, with your hosts Josh Sheluk and Colin White, portfolio managers with Verecan Capital Management Inc.
Josh and Colin coming at you because there's a lot of exciting things happening in the world. Well, at least that's what somebody is telling us. So, Josh, is there anything exciting in the world going on right now?
Maybe too much exciting. Is that possible? Can there be too much
No.
excitement?
Too much happiness?
Well, actually, a lot of this stuff isn't happy news.
Oh,
It
okay.
could be exciting, but not happy, maybe.
Bring us up to speed because I've been traveling a little bit and maybe I didn't catch all these headlines as they went by. So educate me, Josh.
I'm pretty sure you've caught these headlines. So we're just gonna do some quick hitters on news of the month, maybe we'll call it that. But I think one of the things that's been very topical over the past couple of weeks is this war in the Middle East, if we want to call it that, and expanding conflict. So I had a friend that said, yeah, we might go to Egypt. And I was like, really? Do you know where Egypt is? And he said, yeah, but we're just going diving. So we just land there and then go offshore. So I was like, okay, so you're going to be diving in the Red Sea. So anyway, not the most pleasant experience there right now, to say the least, over in the Middle East. And it's been affecting markets in some ways, maybe not the way that people would think, though.
Well, I think that, again, I always take the time to point out of the human tragedy. No matter what your politics are, the human tragedy and suffering that's going on there is unimaginable. We sometimes sound glib in coming off and talking about the financial aspects, but this is why many people have us in their lives, to be their financial monkeys. So our takes here are going to be more financially related. And to be honest with you, Josh, I am a little perplexed, befuddled, bewildered at how little the capital markets seem to care about this level of conflict, other than a little bit of movement in oil prices. I mean, even that's been a little bit, I would argue, muted for what expectations might have been.
Well, for sure. I think Iran launched these missiles at Israel. What was that, a week ago or 2 weeks ago, as we recorded here, regardless of the exact date, but it reignited some of the fears, I think. But that led me to go back and look at how some of these things have performed since the first Hamas invasion of Israel. All right. So that tragic day it was October 7th of last year. And we had it basically exactly a year between that date and when I was looking at these numbers. And sure enough, global stocks up 30% over that period of time, give or take a percentage point, and oil down 10% over that period of time. So go figure, right? Probably if you asked somebody, what would your knee-jerk reaction be to that, or expectation, they would have assumed the exact opposite of that.
Yeah. You're right. I don't think that there's an academic case that could have been built a year ago projecting this outcome, which again further goes to our opinion that forecast in the future, even if you get the event right, is still fraud. Even if you get the major macroeconomic or major geopolitical event correct, that doesn't even help you in a lot of times, because things can move counterintuitively. Now, I think we could study it for a decade with a bunch of graduate students to try to figure out, what was the expectation baked into the market, and how did that expectation manifest itself, and all of the mechanisms that went into having that play out with the rules of sovereign wealth funds, and all the other stuff you could get into, and we might understand it 30 years from now. So I think the only thing we can do is just take part of the continued lesson that just stop. These are not investable events or investable ideas, because they're just not going to behave in a reasonably forecastable way.
Yeah. Do you think Hamas went long oil futures on October 6th, 2023?
I neither can confirm nor deny any conspiracy theories that may be posited, based on world events.
Even they would have been caught a bit blindsided by what happened next.
Yeah, exactly. Hey, we're successful on the battlefield. What happened to the bet that we placed? So you lost that. Oh shit. So no, I don't want to be seen as making light of a real tragic situation. But I think this is a very serious point, and we strive to educate people and try to protect them from getting confident. And I think this is just another great flashing example of the markets have got, based on this incident, have no business reacting the way they've reacted. And, but this is so goddamn always that these kinds of things happen. So, disavow yourself of the idea that you can begin to predict these things with any kind of useful certainty for sure. It's beyond what would be considered an investable idea as far as I'm concerned.
Yep. ×2 for me.
There you go. You're always one better than me.
Speaking of things that aren't really predictable, jobs. And we have releases out of both Canada and the US over the past couple of weeks, actually, that have been quite positive on the jobs front, which is kind of bucking the trend from earlier this year. So should we start changing our minds with where we think these economic numbers are going from more negative to back into the positive front? Are you there yet?
Well, I'm not. It takes 2 data points to extrapolate to a trend, right? So
I guess so.
At least 2, right?
Yeah.
And I think that you did a good job earlier today. We had a conversation talking about how, these jobs numbers that get released are best described as estimates, or generously described as estimates, with the sample size that is used and the historic restatement of these numbers that has gone on. Again, I think there's a lot to be taken with that. They do, not in a vacuum, but in the day it comes out, it does affect mood. Now, it's not the only thing on any given day that's affecting mood, but it is certainly one of the things that seems to cause some kind of a reaction in the market. But as with typical daily market reactions, it's probably overblown. I still love the term, and I brought this up to you earlier, that the people are now talking about the no landing. We've gone from hard landing to soft landing to no landing. I couldn't describe to you what a no landing is, but apparently these numbers indicate that we're having a no landing. But I think it's necessarily messy. When you have a trend, it's not a straight line. So this is at least that bubble that we should have been expecting along the way. And I'm sure 6 months from now, we'll know whether this is the reversal of a trend or it was just a bump along the way.
Yeah. I think this has happened a lot this year. There's been a trend. It seems to be somewhat well established. And then something comes that surprises us outside the trend. And everybody spends a lot of time talking about, well, what if this is different? What if it's changing? Blah, blah, blah. And then next month, the next data point comes in and we're like, oh, we're back on trend. It's kind of like we're following our Google Maps GPS and we've got off the highway to get gas. And how like sometimes Google's like, oh, make a U-turn, go around the block 3 times, and then you'll be back on track. And you're like, well, no, I can see the road. I just need to get back on the road. It's not that big a deal, Google. And I feel like we kind of get lost in that sometimes when we see one thing that happens outside of the path that we think was set.
Well, there's 2 layers of messiness. There's, when change happens, it doesn't necessarily go in a straight line, even if you can accurately measure it. But then you can also, verify, are we accurately measuring it? Like, is this an inaccuracy in the tool, or is it the real life experience of, data is a little bit noisy sometimes? And it's probably a combination of those 2 things. And then there's, all of the stuff that's being released is being specifically released right now in order to influence the elections, of course. And we all understand that, right?
Oh God, don't go there.
That's why I love doing this raw, Josh.
Right now.
Yeah, exactly. That's why I love doing this stuff raw with Josh, because he doesn't know what's going to come out of my mouth. So,
yeah. Oh boy. So the next thing that out on my list is rates, interest rates specifically. Mm-hmm. So we've seen multiple rate cuts. The last time we did a news podcast like this, I don't know when it was, but we've seen definitely multiple rate cuts, or at least one significant rate cut out of the US since we've last recorded anything like this. Now, the last 3 or 4 weeks, we've seen interest rates go up quite a bit. So explain. I'm perplexed.
You want me to explain that? Well, which is it? There's more buyers than sellers, or more sellers than buyers? Like, I can't do that gymnastics in my head quite fast enough. I think it's people are beginning, and I've said this to you before. Everybody talks about where interest rates going. Well, maybe they're just being. Like, sometimes, you're where you're going to be for a while. And, so the short-term rates may not be moving, or may not be expected to move quite so much, especially with the contrary data points coming out. Maybe that's changing expectations, because we now have a verted yield curve. It's no longer inverted, it's currently verted, right? Is it stayed inverted? Like, are we still in the normal yield curve space?
I think it depends on which maturities you're
210.
looking at. We're both verted and inverted at the same time, if such a thing is possible.
Oh, well, okay. You're gonna have to help parse me with parse that one for me. But no, it's I think that there has been maybe a longer expectation that this interest rate cycle from the central banks was going to be more of a systematic thing. We've already missed so many projections on what that was going to be. Maybe there's some doubt creeping in, right? Maybe there's some finally people are stopped betting on, because I've even stopped hearing anybody talk about how many interest rate cuts are priced into the market, because that maybe is one of the stupidest, most inaccurate indicators we've had in the last 2 years. It's been so colossally, like, meteorically wrong, and both in magnitude and timing. So maybe some of that's unwinding. The market has stopped pricing things in.
Yeah. Well, what you mentioned a couple of times there, expectations. This is all an expectations game, right? That's all it is. That market was expecting one thing, and all of a sudden the data starts changing the other direction, and the market changes their expectations. So the number of rate cuts, I agree, is somewhat stupid, but the number of rate cuts ideas, it manifests itself through the interest rates that you see on the yield curve. So that's what we're talking about here. So 3 or 4 weeks ago, the market was expecting maybe worse economic data than we've seen through some of the jobs numbers that we talked about earlier. And better economic numbers means less of a need to be aggressive on rate cuts. That's why we're here today.
Yeah. No, I mean, the wheels haven't fallen off, or not looking like they're falling off anything. Like, there's nothing apocalyptic going on. So the commentators are going to be searching for apocalyptic-ish type things to kind of, draw out of what's going on right now. And I really don't think it's there. Like, we've have all the geopolitical reasons in the world for the market to be in a complete tizzy right now. A US election, most of Europe's at war with somebody, and nobody's really confident about the outcome of any of that. But the market's still trucking along, up again today. So we have every possible reason manifesting itself right now that things should be a mess, and they're just not, which is perplexing and boring, and going to cause some people to lose their jobs. But you haven't even touched on the most exciting news, Josh. Was that the last of the news you thought was exciting?
Yeah, I thought interest rates were the most exciting thing, but correct me then.
Well. I mean, there's one of the big green monster here in Canada has been in the news a couple of times this week.
Yeah, that's true.
So TD Bank is writing, depending on how you cut the cheese, somewhere between a $3 and $4 billion check to make up for a systematic allowance of cartel drug money laundering. That was a failure, according to the news reports that have come out, a failure at every possible level of the institution. And they've had a cap slapped in place that's basically going to prevent them from growing in any kind of way in the US retail space down there, which is more punitive in the bank world, because banks count on growth and their share prices count on growth. And this is similar to what Wells Fargo went through, and they're still capped, and I guess that's pushing 6 years now. So the regulators in the US are particularly unhappy with how TD has run the shop down there. And that is going to have a spillover into Canada. And that is going to affect the Canadian share price. And again, in my opinion, should affect people's opinion of some of these larger institutions. This wasn't a mistake. This was a systematic allowance of something that was to the short-term benefit of the institution that eventually got caught by regulators. And that is a very serious thing. And layered on top of that, they also lost their class action lawsuit this week. Did you see that? Oh, sorry, they didn't lose. They decided to write a $70 million check without admitting.
So they don't have to call it a loss. It's kind of like a draw, but they pay a bunch of money to get the result.
I did nothing wrong, but here's $70 million, because this stems from, and all of the other institutions have this pending against them, where they were allowing mutual funds to be held in self-directed accounts that paid a trailer commission that was ostensibly for service. But by regulation, we're not allowed to give any advice to the actual people buying the funds. And they just pocketed the money and kept quiet about it. And anybody in the industry who saw that happening, anybody who understood what was happening, was just amazed of the audacity that they were allowing it to happen. And it wasn't like they allowed it to happen for 6 months. It was years that went on. And, this is the first of the class action lawsuits to be settled. And I'm sure a press release is going to come out making it sound like it's not a big deal. It's a big deal. It's a big deal that they thought they could get away with it. It's a big deal, the audacity of actually doing that to people, charging a fee for a service that they were not allowed to offer through the channel they were charging it through. I mean, that's just ridiculous. Anyway, that was news this week too, Josh. Maybe we read different parts of the paper. I don't know.
No, definitely hit my radar. Hit my radar for sure. When people have asked me about this, I think the billions in fines are somehow insignificant or inconsequential in the grand scheme, but the caps on what you can do from a business perspective are much more meaningful, I think, to their success or failure as a business and their success in growing their share value. And I'm glad you brought up Wells, because I think when the news first started coming out about Wells Fargo and some of their transgressions with the sales practices, you could kind of shrug it off a little bit. Like, not to say that it wasn't bad or detrimental, but like, is this actually going to affect such a massive organization as Wells Fargo? But if you look at their stock price over several years following that, it was a really challenging time for them as an organization. So I think this is maybe not quite as significant for TD as it was for Wells, just because it's their US operations and still a big chunk of their operations are in Canada to TD, but it's significant nonetheless.
The other thing I would point out is that institutions don't feel pain, individuals do. And all the individuals responsible for all of this can move their careers elsewhere. So the individuals who were perpetrators or were accomplices or enablers for any of these activities, their careers have moved on and they're somewhere else. I don't imagine any of them are suffering any consequences, from this transgression coming to light. And for me, it's more of an indictment in the organization. Again, we have, when we're looking at investing in a company, one of the things we're looking at is, what's the corporate governance? How reliable is this management group? That's one of the things that needs to be evaluated when you're making an investment. And an organization that has allowed a transgression on that scale and size and to be hit, back to back. I think they also wrote a check last week or last month over the use of apps for communicating with clients in violation of a couple of regulations. So they've had three pretty major quick hits here, which all indicate a lack of some kind of oversight or understanding or less than optimal management standards. So that to me starts to add up and say there needs to be a change. Now maybe it already has happened. Maybe that this has already flushed its way through the system. But that's a lot in a relatively short period of time. We're an institution that was top of the mountain, like one of the more revered institutions, one of the better performing institutions. But as it turns out, a lot of that seems to have been built on air.
I would push back. I don't think it's been built on air. I think they've likely had a lot of success in the business nonetheless. But I think it's really hard for most investors, even ones that are close to the board or executives, to really assess governance and quality management. Like, we can have a conversation with those people, and it's still, unless you're boots on the ground really on a daily basis, it's really hard to assess, I think, the quality of those people and really the intentions of those people. So I wouldn't really blame any investors for not being able to see like, oh, there's some failings in governance here. And I don't think that's what you're suggesting, but I think the bigger takeaway for me is, even good, solid organizations that seemingly have stable management teams and good governance and all that, they can still run into issues from time to time. And it comes back to like, how confident are you in one specific business that they're going to be infallible at all times? And even something that has as dominant of a market position as TD can stumble. And we've seen dozens, there's hundreds of examples of this over the years, but it's a clear indication that don't put too many eggs in one basket, because there's stuff that you're just probably never going to be able to assess and forecast or predict.
You only really see a light shined on it when there's a problem, so, because this has happened, there's been necessarily disclosures, right? So you start to see some of this that you wouldn't otherwise, have a lens on for sure. And no, I don't think it's something you can predict, but it is something I think that you should expect and keep in mind when you're being confident or inconfident with, how an organization is being run. And part of this is trying to build on the idea that, the Canadian banks are not infallible. They're great institutions. They're very well-run companies. Well, they don't belong on any kind of a mountaintop because there are some fairly severe transgressions that happen from time to time with all of them in one way or another. So,
Yep. Fair point.
If you're breaking a sweat trying to figure out what your financial advisor is talking about, you're not getting the service you need. You probably hate trying to get an answer from them, but you also think moving your accounts will be a headache, and it might be. But working with don'trocktheboatwealthplanning.com or .ru isn't exactly stress-free, is it? Call us. We will demystify the world for you.
For more information on the subject of today's podcast or any other financial topic, please visit us online at verecan.com. That's verecan.com. There's plenty of information there, or you can reach out to someone on the team. Thanks for listening. Please note, the information provided in this podcast is for general information purposes only. It is not intended as financial, investment, legal, tax, accounting, or other professional advice. Our discussions are not a solicitation to buy or sell any securities or to make any specific investments. Any decisions, based on information contained in this podcast, are the sole responsibility of the listener. We strongly advise consulting with a professional financial advisor before making any financial decisions. Listeners should be aware that investing involves risks and that past performance is not indicative of future results. Barenaked Money is produced by Verecan Capital Management Inc., a licensed portfolio management company in Canada. We operate under the regulatory framework established by the provincial securities commissions in the provinces within which we operate. The views expressed in the podcast are our own and do not necessarily reflect the official policy or position of any regulatory authority. Remember, at Verecan Capital Management Inc., we focus on aligning our goals with yours, prioritizing integrity and transparency. For more information about us and our services, please visit our website. Thank you for listening, and let's continue to challenge the norms of the financial services industry together.